Hey, good morning, everybody. Brian Hoops here, Midwest Market Solutions. Our Market Insider TV commentaries. It is Friday morning, October the 27th. Thanks for joining us. I'm getting on here a little late. Just been extremely busy this morning, talking with producers about their grain and livestock needs. So many producers finding overruns with their bushels this year. And I think one thing that a lot of people are starting to do this year that makes so much sense compared to a year ago is they are making cash sales now of overrun bushels rather than putting it in commercial storage. If you're faced with storage in commercial facilities as your only option, there's much better ways to play this market. Maybe looking at July call options or some spreads or different things that minimize your risk, maximize your potential profit opportunities. And we can help you by doing that. Just contact any of our 8 offices. They'd be glad to assist you and give you some ideas of different marketing strategies. But a little bit different mentality this year than a year ago, where producers were just steadfast in storing, paying commercial storage only to watch prices slip away and erode throughout the winter and into the spring months. So a lot of different mentality, which is a good thing. Maybe a little negative on the short term, but longer term, it's certainly a more viable option. A couple private export sale announcements this morning. This is different than a previous sessions, as we have not had any private sales at all this week. 238,000 beans to China and 132,000 corn announced to Spain as being sold. That should provide us a little support, but really there's no reason to see corn and beans take another leg higher. Beans are getting close to their uptrend line support. We talked about that in our TV commentary last night, and that should be an area that holds soybeans for now. Dry area in Brazil is expected to get some rain. That'll keep a lid on a rally attempt, but if that rain misses, we should see the next leg higher. Wheat futures look to come under pressure this morning from higher U.S. dollar again overnight. We talked about this as well in our TV commentary last night. The bullish reversal that was scored yesterday, and with GDP coming in better than expected this morning, we're going to see strength in the dollar translate into weaker wheat prices. Livestock trade, the cattle market looks strong here. There's really not much reason to sell this market other than if you're a feeder and you're looking at the big futures premiums that are offered. It's got to be attractive to go ahead and do some hedging out there. Meanwhile, the money flow is all to the long side. We have no cash cattle trade yet. Packers have raised bids in an attempt to get cattle bought. Feedlots also raised their asking prices because they are now really bullish, and they have reason to be after this futures market's on fire, and it looks like Packer demand is going to have to come to the table and pay up for the cash market this week. But so far, nothing has